Now, house prices have fallen to 2002 levels according to new reports just published. But does that mean you should take the plunge and buy a house this year?
The cut in stamp duty in the budget means buyers might be in a better position than before, but with banks reluctant to lend and mortgage interest rates on the increase, is it still a no-win situation? Here to discuss what lies in store for this year are Karl Deeter of the Irish Mortgage Brokers and Marian Finnegan of Sherry Fitzgerald Auctioneers. A very good morning to you both. Thank you for coming on.
Good to see you.
Karl, we'll start with yourself. Before we get into people who are buying this year, what about people who have mortgages already, in particular fixed rate mortgages? You believe that they are going to get an unpleasant surprise later in the year?
Well, it's people on variable rates. I think that their rates are going to increase this year by about 1%, and I think that as people on fixed rates come off their fixed rates, the only offers that they'll get will be much more expensive than the fixed rates they may have been used to renewing on, or they might get pushed onto those variables, which, like I said, are going to be going up.
So even though people might be thinking, all right, if I am going to step into the housing market, into the property markets and buy this year, the mortgage that they're going to acquire, or indeed if they're going to tailor, is going to see to it that it's almost out of one hand, in one hand and out the other. Exactly.
I think that the banks at the moment are capturing a lot of the value with increases in the prices that they're charging. For instance, if you bought a house with a tracker mortgage, it was €400,000, and then you bought the same house today for $300,000. Because of the cost of finance, you're actually paying the same amount every month at the moment. And that's something that you need to be aware of, is that the price of property is one thing, the cost of it is an entirely different thing. And because of the way that banks financed fixed rates, it's going to be a case that later in the year they may start to really push the prices up so that people don't go for them. They may start to withdraw them from the market the same way that tracker mortgages were withdrawn, or they may only have offerings that are to certain types of customers, which might be only their new customers or only their existing ones. But I think you'll see a big contraction in the number of fixed rates and the prices that are being charged.
So they're losing money on these fixed rates, isn't that right? I mean,
absolutely. And the shocking thing is that it's state-owned banks are the ones that are giving the best deals. Anyone who wasn't bailed out is actually offering something that's kind of based in reality. And for instance, in the 3-year fixed rate or the 5-year fixed rate, they're both banks that are owned by the state that are offering the cheapest. And that tells you something, that there's a huge amount of political pressure to keep those prices where they are. But I think that as the taxpayer comes to the realization that the more cheap loans we give out that are loss-making, the more the taxpayer pays, that will have to end.
What kind of percentage price rise do you see in the rates?
On the variable rates, I think you'll see what we would say 100 basis points, or 1%. I think that on fixed rates, the sky is the limit, because they don't want to do them. Banks are going to want to cease offering fixed rates. And for that reason, I think if you are buying at the moment, it's important to look at whatever the longest fixed rate is that you can afford and consider it.
Mary, moving on to what's going on within the property market. I mean, I know it's early in 2011, but what are you seeing so far? Is anything shifting, and where is it shifting?
I mean, we do have a functioning property market. It's not the market that was there during the Celtic Tiger, but it is a functioning market. It is heavily influenced by the level of first-time buyer demand. So, for example, for our own properties nationwide, over half of them are being bought by first-time buyers. So volume levels are down significantly on 4 or 5 years ago, but they have improved and remained quite strong towards the end of the year, which I personally was very surprised at. I had assumed, with the bad news emerging from September onwards, and then obviously the very bad news at the end of the year, that we would see sales falling off a cliff, and that didn't happen. Now, the positive, and there's positives and negatives when you look at the next 12 months. The negatives are obviously the two sides that I would see as being the biggest issues are availability of finance and concerns about the economy. Assuming that we put those to one side for the moment, the positives would lie around the stamp duty changes. So if you were typically buying a €300,000 property today versus in November, you've a saving about €9,000. Which is quite significant for anybody coming into the marketplace. And that should encourage people who are borderline making a decision to start to make a decision. It could also impact supply, which is, interestingly enough, is an issue in that in some locations supply is relatively tight now in comparison to a more normal market, because people are not putting their property on the market because obviously concerned about what prices they will achieve. So for a functioning marketplace, you need a relatively robust level of supply, not a saturation, but a robust level of supply and reasonable interest. So there's concerns from the financial point of view, and obviously it would be ridiculous to suggest that we're over the hump in terms of the economic side of the story. But if we meet a couple of pressure points throughout the year, people will become more accustomed to the changed economic environment.
Well, Karl, I mean, I'm looking for a house this year. If you were in my shoes, would you buy this year?
Well, it depends really. I think, echoing what Marian has said, is that there are certain areas that I think will be a good bet in the future. If you're buying a house and you say, I want to live there for the next 20 years, non-apartment second-hand homes in cities, in other words, your three-bed semis, typically priced less than about 450,000 in heavily built-up areas, they're desired. People want them. They seem to be declining much at a lesser speed than, for instance, apartments. I think apartments are a total washout. Only in the city centre of basically Dublin, Galway and Cork, if you were looking at an apartment, would I consider it? And even then, we have no idea what the National Asset Management Agency, which owns a huge amount of apartments, is going to do in the future, and we don't know if there's going to be fire sales coming on board. So it's a particularly tough time, but if you have a housing need and you're going to do it anyway, then what you need to do is just be really careful about how you do your finance, where you buy and at what price you buy. And I certainly don't think that there's anything wrong with saying, if I don't get what I want, I'll hold off, because I don't think that there's that issue of losing your edge if you were to pull back from the market. And that's all you can do. That's the best advice you can get.
Have you seen many repossessions come on the market yet? I mean, I know they're going to be up hugely this year, Marian.
Not as yet. No, it hasn't really. I mean, it's way too early in the season to see volumes of that type. Just in terms of what will happen to prices, people are considering buying. I think it is very much, as Karl said, down to what your intention is. Property should never be viewed as a short-term bet. So if you're looking at a family home, and if you have to remember, prices are down on average in Dublin by over 50%. So that's a very significant reduction. And you have a further significant saving, 5-6% in terms of stamp duty. If you find the perfect home you want to live in 10 years, I personally believe that you make that 10-year investment based on your personal financial position, and speculating about a 1 or 2% differentiation in the price, really you can lose out. But obviously, if you're speculating in the market, this is not a market to speculate in, it's a market to invest in.
For those who are trying to sell, I feel sorry for anybody who, during the Celtic Tiger, wanted to get on the property market, and their only way to do it was to buy an apartment. And now they're left with something that, as you've just said, Karl, people are being advised not to buy. Look for three-bedroom houses. Have we seen our property prices going to fall again in the next 12 months?
I think if you look at the index, if you just take housing as one sort of homogenous or all built-in price, well then absolutely they're going to fall. I think that if you break it down into some of its primary components, that some will really keep falling and others will start to bottom out. Everyone wants to know when's the bottom, where's the bottom, and the issue with forecasting is that that's only something you can see in the rearview mirror. You only realise it after the fact. But I do think that, as I said, for certain types of housing, I don't think there's going to be much more in it. And the ideal time to buy is actually just right before the bottom. And that's the tricky thing is, you know, when do you make that call? It's incredibly difficult, and nobody ever gets it right. So it's really down to the individual.
We could talk about this topic all morning, I'd love to. But thank you both for coming on and giving us your thoughts.
Thank you.
Okay, now don't forget, if you've missed any of the programme, you can catch it online at tv3.ie/The Morning Show.
On tomorrow's programme, this January, the retail industry has been hard hit by the recession. We'll be meeting two women who worked with Super Quinn and Lace for over 25 years about facing the new year with no job.
The Midday Girls are up next. We'll see you tomorrow at 11. Until then, have a great day. Bye-bye.